Good morning, guys. Just getting started up. How's everybody doing so far? Good morning, Anurag. Good to see you. Asham, good morning. Keith, Mike, good to see you guys. Alex, how we doing, Alex? I just got a message from Dave. His computer's freezing, so he'll be here when he can make it. I'll give him a hard time for having a Mac or something. They ever going bad all right? Macs, PCs, Androids, iPhones. Had to fill up the coffee so it's good and hot. All right. Anybody in a trade this morning outside of the ones that I've been texting on the side? Hey, there's Dave.
Good morning, everybody.
Good morning, Dave. It says your computer's frozen with all your trading.
Oh, yeah. Just as I was ready to get online, I did something stupid like copy an email onto my desktop and it froze everything up.
We're
How's
just
everybody
getting
doing?
settled in.
Okay, great. Open up the chat. Good morning, Newark.
Yeah, we got a decent crew coming in.
Hey, Sean. Yeah, definitely. We're still, I guess that's one of the reasons why I didn't give it a 95%er. Everything seemed up, but we're still, I mean, the binary trend is not 100%. We got a 1 in the first column today or yesterday, but for the day, it might be okay. Starting an uptrend, but we're still going down the negative side of the bell curve. We haven't gone up the positive side of the bell curve.
Yeah, I thought the same thing for anybody that saw the quick little video I put out where it's like, hey, yep, this is finally looking like a turn. The 4 to the 2, the 1 in the first column, all the good stuff was lining up there. But yeah, like you say, it could just be at the end of the day. We'll see where this finishes.
Yeah, it could be. Sean, yeah, it could turn up positive later, absolutely. Yeah, Andre did go in the opposite direction, but I think it's temporary, maybe just around the open here. I've seen it looks like everything is still fairly positive as far as the spread goes. If we do get a turn here, it looks like we hit a kind of an intermediate term top in the bell curve. It couldn't break through that 4. So we'll see. We'll see. It's interesting that I think we're pretty close to a turn though.
Yeah, I did notice that, Andre, as well when I was watching the Open with the SDs and STs, is they were pretty strong in favor for the other side. YM was much weaker, according to the SDs and STs, when we opened up. -6 to a -3, -6 to a -2. So not drastic, but there was definitely some separation there.
Yeah. So we'll see. It could turn. So, because we use the spreadsheet on an end-of-day basis, it's always end of day. So, we could end up turning higher after this turn lower in the morning here.
Yeah, even in those first couple minutes, it looked like it was still going to pop watching it, but then it took over to the downside.
Yeah. Absolutely. Righty.
Sham says, one question I wanted to ask, thinking about this last night, is there a way to determine a negative, positive fat tail? I don't know if there's a way to say this is going to be a fat tail. It's always something we watch out. I shouldn't say always something we watch out for, but it is something that is a potential. I don't think there's a way that we can identify when it will happen, though.
Yeah. The only thing that the only thing that kind of gives me an idea that if it's going to be a fat tail is that we never go positive after hitting the peaks. And let's say we go from a -2 where it was yesterday down to a -1, and it just kind of slowly goes down, but it never hits a positive number. That'd probably be the only kind of warning sign that, hey, we may not be turning positive here. So, I mean, for the bell curve to stay negative and never go positive, that's kind of what I look for a fat tail.
Keith, you're 2 out of 3 on your analysis there. The spreadsheet is an up bias. Is the bell curve, we went from a -4 to a -2, that's up. We got a 1 in the binary trend that indicates a potential turn, so that's an up. ROC -0 to a 1, that's up. So the spreadsheet is an up bias.
Yep. Let's see, Nurk says, wasn't the H4 almost a continue? It was very, very close. It was 0.22. And so, yeah, it was very, very close. Yep, very close. It definitely showed a downward bias, which if we hit 0.25, it would be a continuation. But we didn't quite get there. So.
And I was looking at the same thing with the larger bar previous, kind of taking the whole night into account. That makes it more difficult as well.
Yeah. The new VAL-ARB script on the 4-hour, it looked positive. The 1 minute was negative. So, yeah. Yeah, I mean, if you look at the ARB crossover, they're both negative on the 1 minute and the 4-hour.
I'm looking for that chart. I did have it up earlier.
Yeah, if you just look at the crossovers.
I had too many charts. Then I freak you guys out with my screens flying everywhere.
That's why you need multiple monitors.
I do. It's just a matter of finding the right one. They're not all up. Some are actually minimized. Even me with 4 monitors, I minimize. Because people like to see the planes in the background.
Those are nice.
Diamonds Q's. Dun, 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 dun. There it is. I found it. This is a 15-minute.
Yeah, I think almost all of the time frames are well, that one was heading negative. The 1 minute and the 4-hour were already negative. It was on the negative side of the
Yeah, we gotta look at it like this.
Trend there. Yeah. Yeah, so that was definitely showing a downward bias.
Which was the opposite of where it was yesterday, right? Because before this one started, we were all trending up just like everything else.
Yeah, with the crossover, it seems to be excuse me, it seems to be holding pretty well on the negative side when the trend is negative. That's what it did today. I think Asham in the chat room yesterday, I totally missed the M1. Let's go over the M1 real quick because I hope I didn't confuse anybody, but I made a mistake on that. I had it left over from the previous day, and I use a template for the TSA. So when I'm filling in all of the numbers, I had a down, or I had up at the open, I think.
We'll kill 2 birds with 1 stone. We got someone asking about yesterday, so let's look at yesterday's.
I had it, I think originally I had an up slope for the M1, and it was a down slope. But in the comments, I put it was definitely going to up at the open. So anyway, but I had completely missed it because each one of those from the spreadsheet And I've added the binary trend to the TSAs, and I also added the ROC to the TSAs. And then I completely missed the M1. So the M1 actually had a downslope yesterday, which meant an up bias. So, but it's always, and this is the case, of course, with every single day. Typically, the 1 minute chart from that 8 a.m. Eastern time to 9 a.m. Eastern time gets reversed typically at the open. So if we had a downward sloping line like we did today, typically we get a little bit of a bounce at the open or right around the open. And like yesterday, it was also a downward sloping trend line, and we had an up move right around the open. In fact, not only did it go up, it just continued to go up. It went up straight. So that was yesterday, and that's always the case. So if you guys need to read the disclaimers and the TSAs that human error can and does happen. But this is like probably the most important component of the TSA is that when you're looking at that 1 minute chart, because it's the most recent to the open, a lot of things are built into that 1 minute chart from 8 a.m. to 9 a.m. That's the only period that I look at. I don't look at it previously unless it's totally flat. If the 1 minute from 8 to 9 is flat, completely flat, no change whatsoever, then I'll go back a little bit maybe to the 6 a.m. period to kind of see what happened. But if not, then we only take the 8 a.m. to 9 a.m. period. And if that's sloping downward, it's up at the open. In 90, I haven't calculated the percentages, but I'd say 98% of the time. Today, it didn't do that. We had a downward sloping 1 minute, and it continued down at the open. So it's the 1 or 2% that it did not stick to that rule. So, that's the risk of trading, though, right?
Monday was actually.
Yeah, that was yesterday. Oh, no, trade was zero.
Trade was none. Monday was trade was none.
Yeah, trade was none yesterday.
So yeah, looking at Monday, it was spreadsheet. Well, a lot of it had to do with all these fours on the spreadsheet because we're getting no bias when we get all these -4, -4, -4, -4. So we can't get a good bias out of that. That's part of what went into that.
Oh, by the way, Nurg sent us an email. I don't know if you saw that, but he says that the NDX on the what day was that?
The 3rd, I think it was. That's the same one that I found on the total market spreadsheet. It's the same day. That's probably how you got bit. So what we're talking about is there was and for anybody that didn't see, we do have the total market spreadsheet now posted on the downloads page. And the one thing that is different about that spreadsheet is we use the SPX, the Dow, the actual NASDAQ, and the RUT. We're not using the NDX, we use the NASDAQ.
Right.
So this number on one of the days, I think it's that day, I forget what day it was, but the same thing happened on, for some reason, Yahoo Finance was reporting the same number for the open, the close, the high, and the low of the whole day.
Yeah, sometimes they do mess that up. When I did my spreadsheet, the YMNQ spreadsheet, though, I'm talking about, also is that
I think it was a similar number, wasn't it?
Yeah, it was weird. It's strange because we didn't swap spreadsheets, and you got the exact same closing number on the NDX that I did. And
I wonder if they corrected something.
I'm wondering too, because on the 3rd, it was 7819.06.
Right.
So it did change it a little bit from a -4 to a -2, but it didn't really make too much of a difference in the analysis, maybe a little bit.
That is interesting that we see different numbers, or that we saw the same different numbers.
Yeah, exactly. We had the exact same error, which means that wherever we got it from, it means that number was wrong, and they corrected it later.
I'll pull it up right now. Let's look. Neweg's saying it's still the same.
Yeah,
Are you looking at the open or the closed? The closed?
on the NDX, yeah. Yeah, I corrected my spreadsheet for it's 7819.06.
Yeah, because if we're looking at NDX, close on the 3rd is the 78.57.69.
Yeah, look at that. But if you go to if you go
to Yahoo, oops, not just Yahoo, Yahoo Finance.
Yeah.
And we pull up the NDX. Not that one.
You gotta do the tilde NDX, or not tilde, but the
dollar.
The up sign. No, the up.
See, you can tell I don't use Yahoo Finance.
What is it? On the 6th key, on the number 6, it's the
Caret?
Yeah, I forget what you call it. Yeah. That's it.
There we go. The caret. And so on him, where do they have their, do I click on it and get history? Historical data right there.
So on the 3rd, they had, see, they had the close at 7819.06.
Yeah, that's a problem.
And it's across the entire thing.
So that's impossible.
So that's possible. So maybe our numbers were correct, Norg. Maybe it is the what did you have?
78.57.69, the right one, you mean?
Yeah. Maybe that is correct then.
Yeah, I don't know how they get that. Because there's the 78.57.69.
I'm gonna change mine back to 78.57.69 then.
So it closed on the high. Let's look at that.
When was it? The 3rd? Yeah, 3rd was an up day. And I think I got my number directly from TOS.
Yeah, that's where it finished on the high right there. That was the half day. Maybe
Yes.
that's why Yahoo's goofed up, because it was the half day.
Oh, maybe they didn't check their data.
They don't have their data right for closing at noon.
Yeah, I got mine directly from TOS, so I'm changing my spreadsheet back to the original number then.
So the source is always TOS, because that's actually what the market did. Everybody else is just reporting their data. So don't, at the end of the day, the Bible is the actual market data, not any website.
Yeah, I would definitely check with the broker then that you're using and see what the close is on that day. Alrighty. Well, we got something interesting that we're going to share today. It's already 19 past the hour, so let's get into this. I've been playing with, and I think I mentioned it in last week, is a Renko Cloud. Does anybody use Renko charts at all? Anybody use those? There's it started in, it's a Japanese charting technique, kind of like candlesticks were. It was started, Renko charts go back to the 16th or 17th century in Japan. And what it is, if I don't know if you can pull up your browser again and then type in Renko chart.
If you have a preference on a chart to prep it, I can do that as well.
Yeah, RENKO. And click on just any of the images there to kind of give you an idea of what it looks like. Yeah, that one's fine. So what it is it's a way of measuring the market's moves without time. So each one of the blocks is created by a movement in the actual stock or index or whatever it is that you're using, whatever you're trying to measure, whatever market you're in. And so what happens is there's no time involved in the charting of the blocks. The blocks are created based on a block size, and the block size is dependent upon the chart and the time frame that you're using. So the way that originally the way it was created was that when women were selling rice in the marketplace, every time they sold a bag, they took a block. Renko, R-E-N-K-O, actually means block in Japanese. They took a block and they stacked it on top of another block every time they sold one. So when they sold a bag of rice, they put another block on top of the other blocks, and then they measured, and then they could count how many bags of rice that they sold that day. And so it's really a kind of a measure. It's an accounting measure. So maybe they only sold one bag in an hour, so they put one block on there. Maybe they sold 2 bags in 15 minutes, so they put 2 blocks on there. So it doesn't matter what the time is. It's just that it made a specific, the stock made a specific size move. So you could set the block so that, let's say on a $20 stock, if it moved up 50 cents, each block would be worth 50 cents. So it would only change if the stock moved 50 cents or more, up or down. And you put a block on top, which would be represented by a green block if the price moved up, and a red block if the price moved down. Now, the tricky part about Renko charts, besides the fact that it doesn't measure time, it only measures the amount, the unit that you're measuring, is that on a reversal, not only does it have to go, it has to go, in order for you to get a reversal block going from a green to a red block, it has to go twice the distance. So it would have to move down $1 if you're doing a 50-cent block to get a reversal. And so it's very, very difficult to use if you're trading on a short-term basis, because the reversal happens after a dollar move. Well, you may not want to wait for that dollar move before because the signal to get out of the stock is when the block turns red. Well, it's already made a dollar move lower. You might want to get out before that. So what I was thinking of, I was looking around for a script that would allow us to do Renko charting for the volatility arbitrage trades to give us a better idea of the movement. Because what it does is, here's the whole key behind the Renko charts. It eliminates a lot of the noise. And as you know from our experience with volatility arbitrage, there's a lot of noise in there, and that's why we also eliminate the wicks on the candlestick charts, because there's so much noise in there. And that's what Renko charts allow you to do, is eliminate the noise and try to figure out what the real trend is. And so that's the power of them, but they're not practical for the volatility arbitrage that we're doing right now. So I came across a TOS script that was created by a fellow by the name of Bob Campbell. He put everything that he does in open source. He created an open source website, and in the script itself, I created a links to his website, so that and also the statement that he makes about being open source, that it can be distributed, it can be used, it can be modified, it can be whatever you want to do with it is fine with him. So I linked to it in the script. I also had to update it because the original script was created in 2010, and it had notations for TOS in there that no longer worked. The notations were for an earlier version of ThinkScript. And so I updated the notations to update the script. And then I put it on a couple of charts. I put it on the YM, I put it on the MQ, I put it on some of the other futures contracts that I was trading. And it occurred to me that, hey, why can't we use this for the volatility arbitrage? So were you able to import the?
I was.
Okay, great. Why don't you pull that up? It works on any chart. I renamed it the Renko Cloud because that's really what it looks like. Now it comes, here's the most important part about the Renko Cloud. What it does is, just like the Renko charts, it tries to eliminate noise. And so you can see the green blocks indicate a positive trend. The red blocks indicate a turning of a negative trend. But the most important thing is that there are, you can kind of eliminate all the ups and downs in the candlestick, and you can kind of see that it was basically flat in the overnight session. Then it started turning downward as we got closer to the open. The highs and lows of the script, you can see, are pretty clear support and resistance areas. And what I found was anytime it gets out of those that cloud area, it comes back into the cloud area. It's almost inevitable that it'll do that. If it gets too far away, it comes back towards that cloud area. Because here's the secret. Now we haven't set the block size on this, and when we set the block size, it'll make a difference. I think. What are you on? A 5 minute?
This is a 5 minute, yes, and I've done nothing. So this is just the regular formula.
Why don't you go to a 4 hour? Let's take a look at the 4 hour. This is where it becomes kind of interesting, I think. Here now, if you're gonna put this video out, Dan, I suggest that you cut the next part out, because this is the secret of this cloud Renko charts. We're going down today in the market. And so I took a overnight position, a short position on the MES, just one contract to test it out, and it did well this morning. So I like it. I like it a lot. You need to test it out and use it for yourself, and it helps me eliminate some of the noise that I've been seeing in the market lately. Very helpful.
Yeah, we'll test that guy out. More the better. We'll probably post those for anybody that's doing the VA stuff and has the VA masterclass and above, obviously. And we did have was it an email that came in or a comment somewhere? Someone was asking, this might be a good little last minute conversation, as what you had posted, I think, or what we read in Market Timer Insights is what it was. Someone was referencing the negative interest rates there and the possibility of that coming.
Yeah, there's something going on now that I think it's been precipitated by the trade wars. And the funny thing is that, since the trade war started, and tell me if I'm wrong here, but it seems like every other week, Trump has said, oh yeah, we're going to come to a resolution, we're going to meet, and then nothing happens, right?
Right.
And then he keeps saying, oh yeah, we're going to work this out, and it's going to be a done deal. And in fact, he met with Xi or whatever his name is, the president of China, a couple weeks ago or last weekend, and said, yeah, we're going to sit down and talk about this. And that ended very abruptly, I guess. And people, they went their ways and they didn't solve the issue. So the IMF has been talking about specifically Christine Lagarde. I've listened to a number of her speeches over the last couple of months since this trade war has really kind of gone nowhere. And she is warning of a impending global recession if, in fact, the trade war continues. One speech in particular that I was fascinated with was the effect of European manufacturers exporting to the U.S. And if a trade war continues, and if Trump sets his sights on tariffs for the European Union, how is it going to affect manufacturers in Europe? She specifically used the example of car parts. And I think the Czech Republic had the smallest level of exports to the United States. And so it wouldn't affect them very much for car exports. However, the suppliers and the chain, the manufacturing chain throughout Europe, exports not only are used, those car parts are used in the Czech Republic to build cars and stuff like that, but they're also they're going to be affected much greater because they do export directly to the United States. So it's not just the car manufacturers or the other manufacturers, but it's also the supply chain along the way. And it has a multiplying effect, she said. So, somebody else came out recently. One of the bigger institutional brokerage firms came out with a global recession warning as well. Here's the problem. Of course, we raised rates and we got them up to 2.25%, 2.5%, and then we stopped abruptly. Back in 2018. Powell at the time, the Fed chairman, was saying that we're going to raise about 5 times in 2019. That came to an end, of course. That came to an absolute end. Or maybe it was the former Fed chairwoman. I forgot her name now.
Janet Yellen.
Yeah, Yellen, yeah. And so now when Powell came in, he said, yeah, we'll take a look at that. And but all of those raising of rates has been placed on halt. I mean, basically, and now they're even thinking about lowering rates. Now Trump is really talking about lowering rates, and he wants Powell to lower rates. I think Powell is kind of against it, but he hasn't really come out and said so. The reason that Trump wants to lower rates is because of the trade war. If the Chinese are going to be manipulating the currency lower, that makes our goods more expensive in Chinese markets and overseas markets. It raises the U.S. dollar. He wants a lower dollar. And the only way to lower the dollar is to lower our rates, because money won't flow into a lower rate. They're going to flow into a higher rate. So he wants to devalue the U.S. dollar by lowering our interest rates. The problem, of course, is that everybody's warning that there's a potential for a global recession. And if that global recession hits, in the Market Timely report was a graph of interest rates across the world right now. And there's only, I think it's Mexico and a couple other countries that had interest rates high enough that they could lower during a recession. The typical reduction in interest rates during a recession is 3 to 6 basis points. If in the United States, if we're at 2.25%, I think that's where we are, maybe 2.5%. If we're at 2.25%, if we lower 3 basis points, which is at the lower end during a recession, we're at negative 0.5%. So the Fed really doesn't have a whole lot of room to move if we do go into recession to lower interest rates. And the reason, I mean, say, well, why do we have to lower interest rates if we're in a recession? What difference does that make? Well, it makes borrowing a little bit easier. People think that, I think in the Market Timely report, there was a link to a PIMCO article basically saying the same thing, that if we lower rates, the reason central banks would lower rates is because it spurs economic activity. You know, people will borrow, they'll start new businesses, or they'll buy houses, or they'll buy cars. It'll stimulate economic activity. The problem I see, of course, in the United States, we've never had negative rates. I mean, Denmark, Sweden, and another country right now have negative rates. And I can just imagine what would happen in the United States is if people, yeah, there it is right there. What would happen in the United States if interest rates went negative? Well, one of the things that has happened in Sweden and Denmark and Switzerland is the other one, they hoard cash. Well, now Sweden, Denmark, and Switzerland realized what happened was that it didn't stimulate the kind of economic activity they intended, and instead people were hoarding cash, not putting them in the banks, because they knew at the end of the year they'd get 0.5% less than they put in. Who wants to do that? Now they're outlawing cash. And then, no, you can't use cash anymore. And so they're becoming completely digital. So that was an unintended consequence of lowering interest rates to negative rates. And so now the banks have a liquidity problem. They're not getting the deposits.
That's another thing that I heard someone talk about. It's like, yeah, that only works in a cashless world, which we are not yet.
Exactly. And so, The UK and Norway's, I think, is going to go negative pretty soon. Japan is like right on the edge there. They're slightly negative now. I think they're trying to keep cash, but I think they're going to have to give it up eventually. The U.S. is up there, right around 2.25%. They're probably going to, if a recession hits, and we get a 3 percentage point, which is on the low end of a decrease in interest rates, we're either going back to zero or we're going negative. There's no room, and especially if they're reluctant to raise rates now because of the trade wars. They're not going to raise rates.
I just saw there's an article that came out this morning. They're expecting a cut in July and September now.
A what?
A drop in July and September, reduction in rates.
That. So they punish the borrowers, or they punish the savers. So nobody's going to be saving their money. Of course, they want to spend it, and that's one of the reasons I think. It's a huge reason because of QE. Obviously, they lowered interest rates. They made borrowing very easy for everybody, and that's one of the reasons why the market has gone up. It's very easy. Margin rates are almost, really minimal. And so people who borrow money, they're going to put it into stocks. Where else are you going to get a return? Right? Basically, they're forcing people to invest in the stock market. Where else are they going to put their money to get any kind of a return? With lower interest rates, they could put it into bonds. But if bonds don't go negative, like I think it was, I think Germany recently had a negative rate bond.
Wow.
Who on earth would put money into a bond that they're going to get less out of? They'll get some capital gains because interest rates continue to go lower, but still they got to, if they hold it to what do you call it? They hold it to the end of the term.
Maturity or whatever,
maturity. They're going to hit negative interest rates. I think there's lots of unintended consequences of having negative interest rates that they're not aware of yet. It's just really something that's like brand new. It's definitely going to hit liquidity in the banks.
Look at what Deutsche Bank just did too.
Yeah, Deutsche Bank. Oh my gosh, 18,000 jobs lost. Their equities division is completely. They're going to shut that down. They've lost $3 billion in the last quarter, and they're putting $8 billion into a restructuring. It's kind of scary. I think there is a big chance for a global recession if the trade wars continue, and it doesn't seem like they're stopping. Like I said, every week or every other week, Trump seems to indicate that it's coming to an end. But the Chinese are very tough negotiators, and they don't care how much it costs them. They're going to win. Whatever it takes to win, they're going to do it.
And then between China and there's, we're going to do this to Mexico and Canada, and we're going to do this to Iran. It's like pick a different week in a different country, and it's like throwing the dart at the dartboard.
Yeah, I have no political bent at all. I really don't care about politics. I hate politics. I was in politics, well, not directly, but I was director of economic development for the city I lived in. I was deputy commissioner of urban and economic development for the city I lived in, and I saw politics firsthand, and I hate it. I don't like it. And I'm hoping that Trump is just is bluffing, to be honest with you. I'm hoping that he's bluffing, that all of these tariffs are going to be, are not going to be put into place, because if he does put tariffs in place for all of the countries that he's thinking about putting tariffs in place on, it will definitely cause a global recession. No doubt about it.
And the part that always kills me is it ends up hurting the consumer in the end. It's not helping us if they put tariffs, because we pay more. The countries don't pay more. The end user does.
Yeah, exactly. The countries say, okay, well, you put a tariff on our goods, another country, they're not putting tariff on our goods. We're going to ship them over there,
Right.
and we end up paying 30-40% more for the goods that we normally buy on a daily basis. And think about all of the products in the United States, 80% of them are made in China anyway.
Right.
So what does that do here? If we have, we're paying 20, 30, 40% more for the goods and services that we're buying in the United States, our banks are going either to like zero interest rates or even negative interest rates, then what happens to the consumer? The consumer is going to cut back, hoard money, not spend it because everything's more expensive, and it's going to create a greater recession, I think, in the United States than probably other parts.
And then if you put negative interest rates, you're not going to put it in the bank, so you have piles of cash somewhere.
Exactly. You're going to have people hoarding cash like they did in the 30s.
Whatever's left of it.
Putting money under their mattresses. Yeah, whatever's left of it. It seems to me that here's one last point that I could make is that the quantitative easing after 2008 financial crisis created this unnatural low interest rate environment. And if you take a look at, do a search on Google for interest rates over the last 100 years, you can see that we're in the lowest period of interest rates. I think probably somebody mentioned that it's like the lowest rate in 1,000 years. I don't know how they measured 1,000 years of interest rates, but anyway, they said this is a historically low time in interest rates. Yeah, that goes back to the 1900s, and we're below the lowest low, which was back in 1940. So I mean, we are in some. Yeah, somebody said it goes back for hundreds of years. This is the lowest rate of interest in the history of interest rates that they've studied. You can't. So quantitative easing has basically been a substitute and has extended the inevitable situation that you have of overextending the country's ability to borrow. You've probably seen that clock. What is it? The
debt?
The debt clock. Yeah, pull that one up. I mean, it's insane. You're talking about, I think it's like $1 million per minute or something like that. There it is there. I mean, it's just $22 trillion right now in national debt. So quantitative easing has just put off the inevitable. We can't continue to borrow at this rate forever. Some people say we can. I don't think so. Because what's happening is that we don't have the inflation rate that we used to have. And for all of the quantitative easing that was done over the last 10 years, hasn't pushed the needle on inflation. They got to target at 2.25% maybe in inflation. But I think we hit 1.8 last year, and they put trillions of dollars into the QE program without really pushing the needle much on inflation. So I think there's only a couple of different outcomes. Number one, I mean, this is one other point I want to make about quantitative easing. Negative interest, if we do go into a recession, their only choice is to lower interest rates, because I don't know how you guys feel, especially for you guys who are in the United States, but another round of QE, if we go into a recession, is going to be extremely unpalatable, I think. I think that people would be up in arms if we went into another series of quantitative easing. I don't know what you think, Dan. People would go crazy.
Right. Yeah.
I think people would fight back against that because they saw what happened in 2008, 2009. We're borrowing trillions of dollars that we can hardly repay now. And so their only choice, they can't do QE anymore. They can't say, hey, we're gonna just pump in billions or trillions of dollars into the economy, and the taxpayer is going to pay for it based on the debt clock there. Instead, what they're going to do is they're going to do a Ceylon type of QE. And this is the worst case scenario. The worst case scenario is that they do something like Ceylon did. The government shuts down overnight. They shut down all the banks. They come back Monday morning and they've shaved 10% off of your savings. They don't want to do that either. I don't think. There's going to be a revolution in the streets if they do that. Instead, I think what's going to happen is they're going to lower rates to the point where it's negative. And that is probably their only choice. And that's what that IMF article was talking about, is that in a global recession, you can make negative interest rates work. You can do it instead of quantitative easing. You can do it instead of doing basically a money grab of shaving 10% off of everybody's savings account and checking account.
There's your QE historicals.
Yeah.
Whoops. Trying to keep this. We're having fun with Zoom. There we go.
So, the president is thinking, of course, not only as a businessman, but as a politician at this point, which one is more palatable? And that's about their only choice. They're not going to do QE again. That's done. I don't think anybody's going to want to bail out any more big banks who have a liquidity problem because interest rates are almost zero. So that's out. That option is off the table, I think. People are going to go nuts if they do QE again. The other choice is to shave 10% off of everybody's savings. That's not going to fly.
that'd be double worse.
You close the banks on a Friday afternoon and you open up Monday morning, and let's say you have, whatever your account balance is, and you got 10% less. Yeah, that will be pandemonium.
Right.
The third choice is you gradually lower interest rates until we go negative. Now you pay the bank to hold your money. That's a lot more palatable and probably the only viable solution that the Fed's going to have if we do go into a global recession, which, if this tariff deal does not get settled amicably among all of the participants, that's where we're headed. That's where we're headed. So, the market has been going up constantly, and in the long term, oh my gosh! I mean, you're talking about we were at 6,000 in 2008. Now we're at 27,000 almost. And so the only people who have really there's a lot of people who have benefited from a rising stock market, of course. Of course, you're talking about investors, and you're talking about people who contribute to their 401k plans. They've all, benefited immensely from a rising stock market. And so I'm wondering what happens when they lower interest rates. Will the market go into a hyperinflation bull run until we hit 30,000 or even 40,000, right? Because money is still cheap.
Right. Well, yeah, if you get negative interest rates, you get paid money to take a loan out.
That's right. Or as soon as it appears that we're going into negative territory, and then all of a sudden what hits the fan, and it's going to have unintended consequences that people are going to be pulling back in their cash, taking money out of the market, hoarding cash because they don't want to be paid. They want to have, even a 0.5% shaving off their money for somebody else holding it. Nerd says, doesn't Switzerland have negative interest rates on deposit of large amounts like 10 million? I don't know. I'm not sure.
Switzerland, they are definitely negative interest rates.
Yeah, they have negative interest rates. I'm not sure if it's more than 10 million or upwards.
I think it's everything.
Yeah,
But I could be wrong, but because that was one of the first articles that people were talking about was Switzerland switching to that affected a lot of things because of all the money in Swiss bank accounts.
yeah, I'm not sure how they would say, okay, well, you got 10 million or more, then you're, negative. Everybody else is positive. I don't know if that would fly. If you have an article or you have some sort of a some information that you could send us, that'd be appreciated. To tell one group of people because they have a certain amount of money that their interest rate is different than others. If you have large depositors, you probably end up getting more interest, or you should be getting more interest, I guess.
Well, you mean like if you make more money, you should be taxed differently?
Yeah. Jeez.
Oops.
Started on that one.
You throw up the softball, I got to hit it. Well, we're a few minutes over our regular time, guys. Any last questions or anything on anybody's mind? As always, we appreciate you guys coming out.
All right. Thanks, guys. Appreciate you. Thanks for listening to my rant today. I just feel like the tariff is, I just don't understand. Maybe somebody has some insights into Trump's negotiating tactics with the tariffs. I think that he's playing hardball, obviously, because he is a negotiator. But the Chinese are going to dig in their heels, and I don't think they care what it costs them. They will dig in their heels and they will not give up. And I'm sure Trump is aware of that, but he's trying to figure out a way now to help
coming out.
Yeah, come out ahead. But we'll see. All right. Thanks, guys. Appreciate that. Yes, China's playing the long game. That's absolutely right, Mark. Have a great day, guys, and we'll see you on Thursday.
Take it easy, everyone.
Bye, Dan.
See you, Dave.